So Funding Night provides unsecured finance to small companies. They're generally owner-managed businesses. And what we're looking for is companies that are growing, that are building something, and are responsibly managed. So one of the things we're clearly looking for is decent quality of financial information, because the historical information simply doesn't give a picture of how a business is going. So we're asking for some track record, like 2 years. We're asking for one set of filed accounts, but we also want to see management accounts which are reasonably current, so within 3 months of the application, including a balance sheet. And the other aspect is of course a cash flow plan. So there is a cash flow for the next 12 months, which shows that a business is actually giving thought to how lenders and suppliers of finance are actually going to get repaid. And we think that's critical for being able to evaluate a business. But what we focus on overall is the owner of the business and how they have conducted themselves. If you go through people's past history, very often businesses make mistakes. A businessman will have a failure, maybe in his past. How's he dealt with it? Has he, for example, if he's had something going into liquidation, how's he dealt with the creditors? If he's actually managed to pay off all the creditors through some scheme of arrangement, that's the sort of person who we'd like to back, because they really honour those sort of relationships. Yeah. We think that's really important.
Very important to remember that when you are looking for an equity investor, you will be giving up part of your business. So that will mean, in some cases, that you have an investor that will take a great interest in what you're up to. You are therefore under the microscope. This, for some people, will preclude it being the right solution. Some businesses do not like to run with outside influence. However, this can also be very beneficial, because often the investor will be a very established and experienced business person who can add real value in terms of the dynamic of running the business. So that mindset has to be absolutely right. And if you're not comfortable with giving up part of the ownership of your business, then alternative traditional funding methods are probably the best way forward. Any equity investor that comes in, and this is a very important point to remember, will be looking for an exit strategy. So they'll be looking to sort of a clear timescale as to when they will get their money back, be it 2 years, 3 years, 5 years, and they'll be very, very interested in how they're going to get an uplift of their investment. They'll want to understand where the business is now. Is it tidy? Is it well run? Who are the people involved? And most importantly, where is the potential? Now, some equity investors are quite daring, they're quite brave, and will make a snap decision based on the personality and the business, and sometimes will make a decision in a couple of minutes based on their gut feeling. But the majority of equity investors will want to really understand how your business operates, will want to understand where the business is going, but most importantly, where is that exit, and what return are they likely to achieve upon that exit. So there's a lot of work to do, however it can be great fun.
My name's Kevin Peake and I represent pension-led-funding.com, and pension-led funding is a relatively unique type of funding for small businesses. What's unique about it is you can use your pension, an existing director's pension, to fund your business. You have to pay the money back, and you have to pay back at a commercial interest rate, but the interest is actually going back into your pension, so it's growing your pension. And one of the things we say to clients is, would you invest in your own business? Because if you would, why don't you invest your own pension instead of in other people's companies through Aviva or Scottish Widows? Invest that money into your company, and because it's your pension, you can decide what the use is. So you might want to use it for staff, machinery, commercial property, and of course the great thing is, because it's your pension, you never have the worry of personal guarantees or the bank pulling the plug on yourself. It's pretty rare that you're going to wake up one morning and go, I'm going to pull the plug on my business, because you are the owner of that money. So it's very powerful, and it works for lots of things. It works very well in service sector and it works very well in manufacturing. So nearly every sector, including franchising, it's a very powerful tool for it. It's not right for everybody, and we do a thorough process to make sure that your pension will be protected. But the real benefit of it is that it's putting you in control of your business, your funding, using an asset that you've already created that you thought you couldn't touch.
So my 3 tips for you today are: issue promptly, make sure your invoice is correct. I can think of 16 points that need to be on your invoice. How many are on your invoice? If you need a hand, ask me. Secondly is your T's and C's. Make sure they're correct, make sure they look right, get them sorted out correctly by a solicitor, and make sure you make reference to the Late Payment of Commercial Debts Act, because that was amended with about a year ago, and there's some really important amendments in there. And my 3rd tip is don't be afraid to chase. You provided the goods or service, your due payment, just ring. Don't email, ring. Listen to their voice, help them if need be. Thank you.
Hi, I'm Parag Patel from Funded Empire. At Funded Empire, we connect individuals that wish to lend money with businesses that want to borrow money. We accept loan applications from startups and trading businesses. Our loan values go from £5,000 to £100,000, and anything over £50,000 must be secured. We look for energetic, proactive, credit-worthy businesses that are really wishing to grow their business and are looking for some capital in order to do so.
Right, okay. So what type of businesses do you have coming to you? Are these the ones who want to bypass banks completely? Have just said, I don't want to bother going to a bank, let me try something different?
A number of reasons we've had from borrowers of why they've actually approached us as opposed to a traditional bank. The main answer that we've had from them is actually the time it takes for them to assess their application and even get a decision. So some of our borrowers have been in the cycle for about 2 to 3 months and still not got anywhere. A flexible peer-to-peer lending model like ours means that borrowers can, from time of application to receiving funds, can be as little as 21 days.
Right, okay. So you offer a really much speedier service then compared to banks?
Definitely.
Yeah, good stuff. Thank you.